Money issues can be a great source of stress. While there are many external factors at play, like a high cost of living or people not making a living wage, some of it can be attributed to people not having a handle on their finances. I put together a list of numbers everybody should know about themselves to help optimize their finances, or in some cases, even avoid the possibility that they might deteriorate. So, the first thing that you should know is your monthly expenses. All the personal finance gurus agree that an emergency fund is key to being able to weather through a rough patch. If you don't budget and you don't know your expenses, how will you know what size your emergency fund should be? I know that some people are saying they don't budget, and it might work for them. I've noticed a trend, especially if they're high earners. However, that doesn't work for most. If you don't have a lot to go around, you can't afford to not know where every dollar is going. The second thing on my list is your deductibles. Just like your emergency fund, your insurance is usually something that you tap into when things go really, really badly. If you have a deductible, you should know what it is in order to make sure that you have enough to cover it. Some people will select a high deductible plan when they sign up for insurance in order to keep premiums low, but they don't know what it should be if they have to file a claim. Also, I'm sure that you heard that half of all Americans can't cover an unexpected expense that is $400 or more. That is really bad news if your deductible is $1,000 if you are trying to keep premiums low. The next thing you should know is your employer match. Now, I want to say something about employer matching and retirement plans. In my opinion, you should always max out all of your tax advantage accounts. However, I understand that's not possible for everybody to achieve. Although, if you're on the fence about it, you need to find out if there's a match to see if that incentivizes you. That's free money. Also, you also have to know how the match works to make sure you're maximizing it. For example, somebody that I know worked somewhere for 20 years and didn't contribute. He assumed that the 5% matching that was promised to him was provided no matter what, when in reality, it's only provided if you put money in there. I mean, come on, it's in the name, match. They can't match 0%. I mean, I guess they can. Well, then it's zero. But you catch my drift. Anyway, the point is, don't leave free money on the table. Number 4 on my list of things to know are investment fees. High fees eat into your return. You should be doing everything you can to protect your earnings by making sure you're not giving your money away to people who are going to be buying their third vacation home. That money is yours, and the best way you can make sure you keep it is by going with low cost funds. Number 5, the state's unemployment insurance cap. Now, it varies from state to state, but some states are more generous than others. For example, in my state, the amount that you are entitled to is half of your weekly paycheck, cap at $800 a week. In some places, that amount is much lower, like 400. In some other places that I've heard about, it's as low as $200 a week. If you're counting on that money, if you lose your job because your emergency fund is not where it needs to be, or because you have made a conscious decision to have a lower emergency fund because you know you're going to get that unemployment insurance, you should know that amount so you can budget accordingly and you're not blindsided. Finally, the last thing on my list is your credit score. Now, I've always valued good credit because it was really just embarrassing watching some relatives get denied or having those collection notices. I mean, it's really cringy to look at. But it was very shocking to me To see how many places that don't lend you money, look at your credit. My first experience was when I got a job after college. The credit check was part of the regular background check. Also, I noticed that when I check my report, I can see my insurer's name regularly pop up. That shows that they're checking. And I can only imagine that it affects my premium. Otherwise, why would they bother looking at my credit? Landlords also check. So when you're renting a place, it's not just about whether or not you can buy. When you're renting, your landlords are checking to see if you are a worthy tenant. And finally, lenders will not give you the most favorable rate. And that costs money if you have to pay a higher interest rate than everybody else for the same loan. So this is it. A list of things that you should know if you're going to get a handle on your money. Do you agree with this list? What did I leave out? Share your own must-know list for good money management. And I plan to document my own journey and share my thoughts with you on optimizing personal finances. If you'd like to support the channel or see what else I'll post, like, comment, and share the video. Of course, I would appreciate it if you would subscribe. Have a good one.